Hey guys, it's Ashley of Stacks and the City, and I want to say hello and welcome to another episode. I'm so excited that you guys are here listening. We are, y'all, in the thick. We are knee deep in the quicksand that is our investment series. So we're just talking about all things investments, y'all. We're not going to hold any bars down. Anything and everything you want to know about the stock market is going to be right here. And so if you haven't already, please make sure that you rate, you comment, and you subscribe. You guys, I'm already listening to the comments you guys are giving me. I'm reading them, and they mean so much. You guys, y'all are literally awesome. I'm truly humbled and grateful for you guys. So yeah, you guys are like awesome. Okay. So today's episode, we're going to be talking about exactly how does the stock market work? Like, what is it? How does it work? I don't even know what to get. Like, what is it? Like, this is if you have literally no idea when the world's going on when it comes to the market. So we're gonna go ahead and get started with that now. Okay, guys, I've been trying to figure out the best way to describe it for you all, and there's a great analogy that I have, but I'm going to give you guys all the terms, and then we're gonna talk about the analogy. So the stock market is basically made up of a whole bunch of companies. That's it. A whole bunch of companies, lots and lots and lots of businesses. And they do something as called go public. So basically, the way this works is that when companies first start, they first have their own business and they're super nice. They're really nice and brand new. You want your business to grow. And in order for your business to grow, you're gonna start earning more money and generating more revenue. A lot of businesses don't have their own money to invest in their own business because they ain't got no money. Think about you, if you're starting your own business, how are you gonna get your money? You may get a loan, but maybe the money's not enough, or maybe you're getting denied. The next step is to basically sell a part of your company to the public, to me and you, to literally the public, like everybody. And the idea is it's a whole bunch of funding for the business, and that's what it's called going public. So usually a lot of businesses are going to be ran by investors, so private investors, so private money. So basically rich people who got their own money to fund a business, or something called venture capitalists. And that's like a group of people that will privately give money to a business. Some businesses, as they continue to grow, don't want to do that, so they go public. That means that they sell pieces, they're auctioning off bits and pieces of their company off to the general public, which is us. Okay, so in order for you to go public, you gotta do a lot. There's a lot of process, blah, blah, blah. Long story short, you and a team of advisors, investors, and money people come up with the first cost to purchase your business, and that's called an IPO, or an initial public offer. So the initial public offer is, you're brand new in this business, it's your first time out in the stock market, like literally your debut in the market, this is how much you're worth. That's your debut price. But the idea is, as you grow, as your business continues to grow, then you're gonna also get bigger. Now, when you go public or it gets sold into the stock market, it means that instead of people having one big company, you're having a share or a piece of the company. A teeny tiny piece of the pie. One share is a piece of the pie. That's basically what a share is, a piece of the pie. So when you are investing in the stock market, you're basically owning a little teeny tiny piece of the company. So if the company does well, if the business is doing well, you're doing well because you own part of the business. So you want the business to grow. You have an interest in getting that business to grow. That's essentially what the stock market is you owning little teeny tiny pieces of companies. That's it. Now, think of the IPO, or the initial public offer, as that boutique. It's a really nice, fancy boutique. It's like sexy, really nice lights, minimal, But that's where they go first. That's called the primary market. Most of us are not getting stocks from the primary market. Most of us do not do that. But it's like that fancy boutique, and it's very exclusive. That's what I'm saying. Most of us don't get to have the IPO, if you will. But it's very exclusive, it's nice, it's fancy, it's only reserved for a certain amount of people. So after they buy that, all those shares, those pieces are bought, then they have the opportunity to be sold in the secondary market. Now the secondary market is exactly what you think of when you think of the stock market. That's basically what the secondary market is. So think of it as the biggest mall in the world, like bigger than big, like eBay mall, like a mall of eBay. And it has anything and every single thing you want. This mall has cars, it has drugs, it has guitars, it has electricity, it has dolls, it has toys, it has cameras, it has clothing, it has like businesses that we don't even know about. Like literally, this is the mall of Mecca. This is the biggest mall ever. That's exactly what the secondary market is. The biggest mall ever. You see people who purchase these primary offers and they're just buying and selling stuff. And instead of them being like actual products, so instead of it being products, they're actually shares of the company. It's like little pieces of company. So instead of buying the Nike shoe, you're buying a piece, like the shoe represents a piece of that company. It's a piece of the company. So yes, yeah. So everyone's like buying and selling. So you're over here, let's say that you want, you go into the Nike store and you want a piece of, you want Nike shoe. So instead of buying the shoe, you get a piece of the Nike pad. You get a piece of the Nike business. You're purchasing a piece of this, a piece of that, just piecing everything together. And then you come up with your own personal portfolio. So basically, it's a conglomerate of the companies that you are interested in, and you have it in your own little portfolio. That's what it's called, creating and building your portfolio. So that's basically how the stock market works. So that's the thing. So the secondary market is like a mall, like a thrift store type of mall, and people are always buying and selling. So not only are these companies buying and selling and trading in this, you're doing the same thing. So maybe you have, some Nike stock, you want to sell some of that to someone else, and they'll buy it from you. Like, it's just a madhouse. And that's why when I think of like those throwback movies of people like going mad on the trading floor, because these things are happening all the time. People are always buying and selling, selling and buying. This is constant. It is literally just shopping. You're shopping. That's it. It's just a whole big mall of you shopping. You're purchasing a piece, but instead of buying products, you're purchasing companies and you're selling the company. So I like to think of, let's say that you go to this big mall, this eBay mall, and you purchase a share of a dress. Let's say you go inside, you go into this big mall, and you're buying the dress. You have this dress, this pretty dress, it's a maxi dress, you love it, because you know that, you buy it because you know that maxi dress is gonna be hot in a year. It's winter time right now, but you're gonna buy it now because ain't nobody buying maxi dresses right now. So you purchase the maxi dress. So instead of it being the maxi dress, let's say you purchase Zara, so they're the same. You buy this dress and then you hold it. So you keep it, you go back home, you live your best life. In the meantime, you might shop at Zara, but you're not selling the dress, you keep the dress. Maybe you are, you're reading about what's going on in the industry, and all of a sudden it's summertime. Bam! That dress is hot. Everybody wants a maxi dress. The price of a maxi dress has went from $2 in December, because nobody wants it, to $50 in the summer because it's hot. Everybody wants a sexy maxi dress. They're going on vacation, this and that. So that's the perfect opportunity for you to sell that maxi dress, because you're gonna be selling it for a price that was much higher than what you bought it for. That is exactly how the stock market works. You're buying something, you're holding it because you think it's gonna be worth more money in the future. And that's literally, that's it. That's how it works. It's basically a maxi dress that you bought in the wintertime, and then you're selling it in the summertime because you know it's gonna be worth more money. Whew. Okay, so that's it. That's all I got for the stock market right now, you guys. So if you have any questions about that, let me know. That's basically what the stock market is. It's just buying and selling, selling and buying. And we're gonna talk more about like strategies and all that fun stuff. But until then, subscribe, and I'll talk to y'all later. Bye, y'all.